Welcome to our presentation on everything you need to know about government benefits. Congratulations on taking a bold step to getting more informed about an important cornerstone of your retirement income planning, on everything you need to know about CPP and OAS. Of course, CPP stands for Canada Pension Plan, and OAS is the Old Age Security Plan. So we've divided this presentation into 6 individual lessons, and you will receive each lesson via an email over the next few weeks. So not all of the lessons may be relevant to you, so you can skip over those if you wish. Today we're talking about an introduction to CPP, how the contributions are calculated, and how the benefit is calculated once you turn 60 and qualify to start collecting CPP pension. You probably have a number of questions, like most people. If you stayed at home and raised children for a number of years, how will that affect your CPP benefit? What if you're over age 65 and you're still working? Should you start contributing to CPP? What happens if you are already collecting CPP and you're still working? What happens if you're over age 60 and you're collecting CPP but still working? What happens if you're divorced? If you split your CPP pension credits with an ex-spouse, how will each of your benefits change? Because it will have an impact. I'm receiving a survivor's benefit. How will that affect my CPP benefit? So if you're no longer able to work due to disability, should you apply for early CPP or a CPP disability pension? And also, are you getting all of the benefits to which you are entitled? Really, you apply for CPP, or the average Canadian does, and they send you a monthly check. Unless you're getting the maximum, that would be simple. But if you're not getting the maximum, how do you know the amount you're receiving is actually accurate? So those are some of the things that we will cover throughout these 6 lessons over the next number of weeks. And again, if you have questions, please feel free to send us an email, and we can address those questions in upcoming lessons. So Langford Financial is myself, Willis Langford, and my wife, Nancy. We own and operate this business solely. There's nobody else involved in our business, just the two of us. We specialize in decumulation strategies for clients who are over the age of 55 and are transitioning into retirement. We've been in business for in our 6th year now, and we've actually done these presentations throughout Calgary for a number of years, and have helped literally hundreds of people make better informed decisions about government benefits. So let's get started with the origin of CPP. It started in 1966 as a plan that was sponsored between the employer and the employee. And the idea of CPP is to replace approximately 25% of your income as you move into retirement. The fund is run by an arm's length board called the CPPIB, which is the Canada Pension Plan Investment Board. They are an arm's length investment firm that makes all of the investment decisions. The fund currently has about $456 billion of money inside the fund as of September 30th, 2020. There's little worry that the plan won't be there for you when you retire. I mean, the plan is sustainable for the next 75 years, and in fact, the sustainability of the plan has even increased because over the last couple years, the requirements for contributions have increased. So the plan's going to be there for a long time. It's a very well-run plan, and the annual rates of return have been in the 10% range, so it's been run very efficiently. The government, regardless of who's in power, they are not the ones running Canada Pension Plan. So the plan is not tied to government coffers. It's actually paid for and funded from the contributions of employers and employees. It's mandatory to contribute to the CPP if you are an employed employee earning employment income and receiving a T4, for example.